What's up, class? How we doing? Starting early. I seen a bunch of people waiting, so I was like, let me just start. Let me get in front of this camera real quick. How y'all doing? How's everything going? Can you guys see me good? How's the quality? Is everything all set? If you're in the house, say hello. Let me know you're here and that you can hear me good. Just making sure everything is in line. We got a good picture going on here. Testing something out with my phone. Jesus says I'm good. We good. All right, so I got a couple of announcements before I get started. We're going to be going over a scenario here that is, just all about transformation with this concept, velocity banking, how it can really transform your whole entire household, your whole family, your whole way of thinking about money, giving, helping people. I mean, everything. All right. So real quick, my anniversary is tomorrow, celebrating a 3-year anniversary with my girlfriend. So I'm going to be MIA for about 48 hours. So you probably won't receive any emails or anything from me. And then the next day is Mother's Day. So I want to wish all my mothers that have been working with me and all the moms that are watching that are not clients yet but will be soon, and all the husbands that have wives that are mothers, I want to wish you all a happy Mother's Day. If I don't talk to you or say anything to you on the day of, I want to wish you a happy Mother's Day ahead of time. It is a blessing to have you mentor, raise us to be young men, grown men, and really help people, help the world, and do the things that we want to do. Let's see, let me just say hello to some people here. How you doing, Jesus? Charlene, Jeff, Juan, LaWanda, how are you? Angel, how you doing? You just joined the Patreon page recently, so I can't wait to work with you. Samuel, how are you? Adrian, we got to talk. Adrian's been a little minute. Craig, we got to talk. I wanna see how you doing. A little progress update. You can just give me your testimony now. Let me know everything's going all right. Let's see. Pink Lady, Barbara, how you doing? Derek, Harrison, Reese, and Walter. Hello, everyone. How's it going? We got 21 people in the house. Cool. I gave a little notice, just a little one, Let's see, another announcement. Gonna be speaking at 2 more events. So I have one coming up in June. Gonna be speaking at. I'm excited about that. And then one in July. I made a strategic alliance with a woman I think is really on to something. I was watching her content and just kind of, peeping at what she was doing, and then I decided to reach out, and we connected. We had a wonderful conversation. She's another woman in Christ, and she's just really building a strong business. She has a whole community, so I'm looking to collaborate, partner with her, and grow. So I'll be doing an event in Fort Lauderdale in July. I'll definitely send an email out to everyone. If you're in my local area, or if you're planning on making a vacation to South Florida, come hang out with Mr. D, and we'll celebrate together. And last but not least, November 9th, Women in Power Expo. I will be there. Come. There's a link below to register. I want you to fly out. You can email me. If you buy a ticket, okay, any ticket now, I don't care. You buy a ticket, you tell me you're coming, send a screenshot to my email so I can put you on my list. All right? I'm going to do a dinner mastermind after the event. We're all going to gather and fellowship together. I'm going to pray. We're going to mastermind. Everyone's going to give their testimony, and we're going to connect and grow, because that's the next stage of velocity banking. Once you're in that process of wiping out debt, well, the next step is really to start sharing this with people and getting your whole surrounding really on a new way of thinking, so that everything is positive. No one's shooting you down. I've got so many people that are my clients and people I've spoken to that are doing velocity banking. They feel like they're alone. You feel like you're alone in this race. Well, I want to tell you, we've got a whole community here. Over 6,000 subscribers now. Every single one of you believe in this concept. You need to comment on the videos and respond to people, like really communicate. And then on the Patreon page, that's another area where you guys can communicate and just talk to each other, connect with each other, right? I want to encourage this to really help you guys build the momentum, all right? So now, story time. Scenario on the board here. Got this wonderful, amazing couple. I think they're awesome. They joined my Patreon page on January 1st of this year, so they've been a loyal contributor ever since. They've been giving in abundance, and I'm working with them on the insurance side of things, you know, the infinite banking, helping them get their policies put in place for their family, for themselves. But what's really interesting about this person is just how they have really transformed their whole way of thinking. Prior to Velocity Banking, this man here on the board was, you know, just didn't have the knowledge, came across this concept in an interesting way. And I knew they were really committed because prior to joining, literally New Year's Eve, okay, all throughout New Year's Eve and New Year's Day, they were watching my YouTube channel on New Year's Eve. They weren't out partying. They weren't out, you know, with a bunch. They actually were with another couple who is also on my Patreon page. Awesome family, awesome group. They hung out with each other and they binge watched my YouTube channel all the way from the end of 2019 into 2018 into 2019. It was the coolest story they told me. I'm like, wow, you know, that showed immense amount of commitment, and that just made me want to really pour into this family and the other couple as well. And I'll have an example for them in the future, but I want to focus on this couple today. It started out with the husband, and then wife started to jump on board, and she started getting involved, and so many things occurred that I'm going to go over. So direct our attention to the board here. Here was their starting income, $23,402 a month. Expenses is $16,229.71. And here was their starting debt prior to working with me, almost $1.2 million in debt. And then this was their about cash flow. Give or take, it could be a lot less sometimes and more, it just depends. And we ended up, we got approved for a HELOC, you know, on their primary mortgage for $67,000 at 5.25%. And what I listed out right here are all the breakdowns of each debt. This is the debt balance, right? They have $970,000 owed on the mortgage. This is a car, that's a car, student loans, all the way down is student loans. He's a MD, so a lot of expense to, you know, become a doctor. So, and then here are the monthly payments on each one of the debts, and then here are the interest rates. All right, just want to lay that out for you. And then right here is the actual plan, the strategy that I laid out for them. And what I'm about to tell you is really going to blow your mind of how awesome and how much traction they're making in progress. So the first move in every strategy that we lay out when we're doing velocity banking is figuring out that chunk. You know, once we've got our numbers in line, we know all our debts, we know where all the money's going, we got our debt tool, now we got to figure out what the chunk is. So if you were to look at these debts right now, I'm going to turn it to you guys. I'm going to ask you, which debts would you pay off? And ignore this chunk right here. I want you to like assume that we're going to figure out the chunk. Looking at all his debts here, which debts would you pay off yourself, right? And then how much would your chunk be? Let's see who's got some answers here. What's up from Michigan? Alice, hello. Ishmael, Denzel, awesome work you are doing. Congratulations on your anniversary. Thank you, sir. May the Lord continue to bless you always, my brother in Christ. Yes, brethren. Okay, cart says 45K. That's your chunk. And what? Towards what? What would you want me to chunk towards? What do you want me to pay off? Jesus says the smaller ones first. Cool. That's a good strategy. Derek says pay the 2 cars. Okay. LaJuan Jones says, hey, spoke to you 2 days ago. Yes. We're going to be working together. Let's see. Trey, what's up, Denzel? Doing my research, trying to get going. I have a few credit cards, $9,000 in debt, personal loan, $12,000, $27,000 on my mortgage. What should I attack first? Hey, man, get your numbers in line. Know where every dollar goes. Make sure you got the debt tool before we jump into what we're going to kill. Car says 45,000. Ken Harrison says second car. All right, so what we did is we decided to chunk at car number 1, car number 2, all right, and get an immediate cash flow increase of the 805 plus the 288. Now, it'd be cool, it's nice to want to chunk at the smaller debts, but you got to factor in what this person is making per month, the potential cash flow, right, and the large HELOC. So the higher the numbers go, the more chunk we have to make for it to make sense when we're paying off debts, when we're borrowing from one debt to pay another. We want to make sure that what we're paying off is going to give me a significant cash flow gain, but also a huge savings on the interest side, so that whatever I pay over here is going to offset because of the amount of interest I saved over here and here. All right. So it wouldn't make sense to tackle the mortgage. That's too big of a debt to tackle, right? It's too big. Even though if I was to throw 49, I would definitely save so many years off. I would shave probably like a year or two off his mortgage, probably more than that. A good 20, 30 plus months, give or take, right? Who knows? But would my cash flow increase? No. And I wouldn't tackle the student loans either, because that's still a big debt to tackle. And then if I was to add up these debts right here, and you add the cash flow gains from it, it wouldn't equal this, nor the interest savings. So our first chunk was about 49K. It was probably a little bit less, I believe, because by the time we actually chunked, right, they started working with me in February. We didn't get the HELOC they joined in January. We didn't start working together, making the chunk till February, I believe, like middle of February. So by that time, the debt was like a little bit lower. So about 49K or less, chunked, wiped it out. Cool. Now we got a cash flow gain. All right. Income for that month of February. As soon as we took this money out, right, we chunked on the day of one of these payments, I believe it was. That's one way of doing it. Or you can chunk on the day you get paid, okay, or the day before. And the reason why you would do that is so that you replenish what you took out of your debt tool, as well as cutting off the interest from even accruing on what you took out. And also you won't have a monthly payment on the debt tool itself. You won't have a payment. So a lot of people wonder, like, whoa, if I take out this amount, then what's my monthly payment going to be on the HELOC? There is no monthly payment because we're dumping all of his income right in there, right? So we don't even give the bank an opportunity for us to send us a bill. We won't even get one, right? I don't get like a bill when I am doing velocity banking, because the bill gets pushed out 2 months, 3 months, sometimes even as far as 4 months down the road. Depends on how your credit union works. So it's pretty interesting, right? And then now, for the month of February, boom, we've got expenses coming out, right? And notice how the expenses have dropped, okay? That's the balance. Next month, do it again. Income goes in, expenses come out. Remember, we're not pulling out $15K all at once, all right? We're pulling it out as we need it to pay bills on the day that those bills are due, right? Balance drops to 32. Income goes in, expenses come out. Same thing, now we're in May, all right? Each column is a month, all right? Coming in May, income goes in, expenses out. Here's the balance, okay? When you're making, I want to say like 10,000 or more a month, you have the opportunity to chunk before you actually zero out the line of credit. And what that's going to do is actually speed up the timeline even further. So rather than me telling this couple, hey, wait another month to actually zero out the line of credit, rather than wasting that time, when we factor in, here are the things we want to factor in. If we're going to chunk before we actually zero out the line of credit, okay, is we want to factor in the total amount of credit limit that we have. We want to factor in the income and the cash flow. So in this particular case, we have really good income, really good cash flow, right? We increased it $1,000 plus already, and we have a significant, like a nice big chunk of credit limit availability, nice space. So rather than me waiting to clear out that 16, I can go ahead and structure my next chunk. It is a little bit less than the first one, but because I'm going faster, I'm doing it in the month of June, right? I'm gonna go ahead and wipe out the next few debts. And then in this chunk, we went ahead and wiped out all of these student loans. Went ahead and wiped those out free and clear, right? This was the strategy that I laid out for them. And here's what would have been the results. Hear my words. What would have been the results? They would have paid $113,000 of debt off in 5 months. 5 months. Oh my. And their cash flow would have gone up to nearly 9 grand. Okay? So that's what I laid out for them. Okay? But can I tell you what actually happened? Because something happens when you start like binge watching on my channel, watching Velocity Banking. You start looking at where every dollar goes. You start paying attention to your money. You start cutting back. You start saying, I don't need this, and I don't need that, and da, and na, right? Well, let me tell you, this gentleman right here, not only did he really bring the home together. I mean, wife is, on the calls, wife started getting involved. She started asking hundreds of questions more than him. And I was like, yes, getting the whole couple together. And so let me just say a couple things, all right? And I'll write it out. Here's what they actually did. In February, right? So going back to February, what they actually did was they cut back on their expenses, right? Husband started looking at all his money. He was like, hey man, I don't need this and I don't need that. He managed to cut back $2,000 of expenses per month. Like, oh man. I tell people that I always have cash flow problems, right? And I look at their income. Some people I work with, they're making 15 grand a month, 10 grand a month, 18 grand a month. Cash flow is like $1,000. I'm like, dude, what are you doing? What are you doing? Right? Like, I don't care how many kids you got. Like, you need to work your cash flow. You need to work that money. You really need to, I don't care what state you live in. Like, you really need to not live according to what you make, right? Don't live according to what you make. Like, if you really want to speed up this concept, if you could live broke, this is what Grant Cardone says. He says, live broke when you're in the process of creating your 10x life, right? Live broke. And what I did was for myself is I lived a 50% lifestyle, not 50% lifestyle in terms of like how I do things, more so 50% lifestyle on how I pay for things. Like I cut back on everything. I only go on the necessities, the needs, okay? So he worked on that. They cut back $2,000 in expenses. Another thing they did was they redirected their money, okay? They redirected their 401ks. He had a 401k, Wax got 401k, he's got 403b, he's got tons of stuff, right? Almost $1 million in assets. And he just cut them off, right? That's all that money is dead money, sitting there dead, right? You think you're getting the match, right, with the 401k. You're like, yeah, you know, Denzel, I'm getting my 6% match, you know, because I put this and then that. But then if I was to break down the numbers, if I really sat down with you and we printed out the whole terms and agreements of your 401k, which most people never do, and look at how many freaking fees are in there, okay, number one. And then number two, factoring tax and inflation, that little match doesn't even cover your cost. So you're technically more money is going into the 401k, right? Because they're matching you what you put in, right? Companies matching you. But what actually happens is over the many years, as you put more and more money in, guess what? Your fees and costs get higher and higher. So what ends up happening is you think you're going to end up with $1 million, $2 million in that 401k, but you're only going to have access to maybe 2/3 of that, because 1/3 of that is going to go towards taxes and fees and interest costs and right? And then the other 30% of that money is going to go towards what? Paying bills, paying debts, right? So this couple right here, they're in their, wife is 48, 49, and he's 50 and a half, or it might be reversed. But at that age, you know, how long is it going to take me to pay off $1.2 million, okay, and still try to, you know, invest, you know, money for the next 9 years? Like, where I don't see where the math makes sense for me right there. So what he did was he's like, you know what, man, we're just going to redirect that money. I'm going to have that money work for me, not I work for it. Shouldn't be working for money. Money should be working for you. It's a simple tool, right? It's the most important tool, really, in your life to get all the things you want to get. So he redirected money. Let's see what else this gentleman did. Oh, he also redirected his savings, right? The heck are you saving money for? It only makes sense to save money to invest, right? But if you're saving money to save for an emergency, where you know, you're asking to lose that money. You're asking for it. If you're saving money in an account that isn't earning any interest, and then you've got to, whatever money it does earn on interest, you have to pay taxes on it anyways. Remember, money that sits, does nothing, is useless. We might as well use savings, use redirection of money to wipe out all this debt, and I'll make you money. I'll actually make you money. His income stays the same, but his cash flow continues to rise throughout the years now, today, right? Now, today, which is really going to impact his results. Let's see what else this gentleman did. Oh, I just wrote that he listened. This is important, you know, and this just goes to show that when you're seeking information, when you are ready to become a student, the teacher will appear. He or she may not look like what you wanted or what you thought. So I'm gonna put me on the hot seat here. I'm only 23 years old, and here we have a couple that makes as many commas, as many thousands as my age, and he decided to humble himself and allow me to share and help him. He allowed a 23-year-old to help him. Like, do you know how much, you know, the man pride you gotta like drop? Cause even I have it. We all got it. We've all got that pride. Like, I'm good, man. I'm making a ton of money, you know. Life's good, you know. Paying my mortgages, right? Paying my bills on time. No. He and his family wants more. They want more. When you want more and you're ready to become a student, right? And surrender to what you think you know, right? And just like come in with a blank. Just come in blank, right? When we conversate, man, it's awesome when I'm able to talk to someone that has not been fed, you know, a contamination about money and these precepts and concepts about money. So when I approach someone that has just brand new to the concept, the results happen so much faster. And on the other hand, for people that are willing to just, hey, let me just drop all my barriers, let me just drop it all and come into this thing blind and let's see what we can do. Do you guys agree with that? Let me hear some comments below. Do you guys agree with that statement that, you know, when you're looking at something new, a new financial concept, you got to just come into it and leave the baggage at the door, you know, leave the problems, you know, just don't judge the teacher, the person that's trying to help you. You know, there's things about me, my character, the way I talk, and I don't know, the way I dress, the way I look. Don't let that confuse you or take you off your goal. Like, just receive what someone's trying to help you with, whether it's me or someone else, right? Just receive it, right? So let's see. Let's get some questions here. Let's see. Billy, how are you, man? Yeah, he says, wow, I need to get to this income level. Yeah, for privacy's sake, we're going to call him daddy. Okay? You know, once you start reaching that, hey, daddy now. So, yeah, we got to get to those numbers, man. Got to 10x your income. You're making $5,000 a month, 10x. What's the possibility that you can go from $5,000 a month to $50,000 a month? I mean, what is the possibility of that, right? Like, it's not too late. If you're 55 years old, look at it this way. You've got 40 years plus of knowledge and wisdom that you can give to young clowns like me, millennials, that don't know jack about the world. And you can provide so much insight and education. You could also provide insight and education to the ones that have been ignorant all their life, right? To what is available out there, right? So if you just took all your talents, all your gifts, and just really committed to helping people, that's a unique way to really 10x and maximize our results on velocity banking, just like this gentleman is doing. So when he redirected all this money, his cash flow is now like 10, almost 11,000 a month. So you want to know the real results as of what? We're in May right now. Here's the real results. What actually occurred. Did I write it down? I hope I did. Oh my God, please, Lord. He paid over $145,000 of debt in a 5-month period. Okay, so this was the layout. He chunked in February, and due to all this redirection of money and focus on maximizing the velocity banking concept, he ended up doing a chunk again, I believe in like April or March. So this 33 ended up coming right over here. And then we're doing velocity banking. And let me tell you what we're working on now. So now we're in May, okay? My marker's dying. Now we're in May, and this gentleman is getting ready to put a policy in place on wife and daughter, okay? And he'll go last. Very noble. Wife, daughter. Okay, we've got a 9-year-old. If you are someone that wants to, if you're a mom, your dad, you got kids that are under 18 years old, and you're trying to do the velocity banking, you're trying to put that infinite banking policy in place for your kids, Some of the criteria is you yourself, whether it's mom or dad, one of you need to have life insurance in place already. And it doesn't matter what the life insurance is. It could be a term, it could be a whole life, it could be a life insurance policy with your company. In this scenario, since he is a doctor, he's got a massive policy on himself through work, as well as wife has a policy as well. So he was able to go ahead and just get started on putting a policy in place on daughter. And another thing that we did, which was interesting, without harming our cash flow to start this at her young age of 9 years old, he was putting money into a college savings plan, $300 a month, I think, so that's $3,600 a year. Well, all we did was cut that off and redirect that money here so it can work better for us so that we can have access to it at a much faster rate and grow it, and also have that massive, death benefit that will grow. So by the time this little girl reaches 18, 19 years old, okay, by then they'll be 100% debt-free, 100% cash flow positive. All their policies will be put in place. She'll have this massive line of credit that he can gift to daughter, that he can, he'll stay in ownership for as long as he wants. I think once she becomes 18 or older, I believe that you can gift the policy, you transfer ownership to her. Now, in my opinion, if I was a parent, I probably would not give my kid authority over a massive, product or tool like that until they're maybe in their 30s, right? Or even older than that, when they're responsible, they've left the house, they know how to take care of themselves and feed themselves, and they're doing their thing, they got their career in line. Or you, the parent, just remains the owner of it your whole entire life, and then you can divvy out money, when daughter goes to college, boom, you give her a chunk of money. And then when she graduates college, give her a chunk of money. And then let's say she goes to secondary, more education, gets a master's, give her more money. And then she gets married, or buys her first home. You can structure it however you like, and then he's just gonna keep throwing that money in there year after year. So pretty cool how we're now in the process, and this is case by case. Remember, this is case by case, people. Don't go nuts thinking you've got to I've got people that have got big credit lines but not big income and thinking they can do a big chunk, and I'm like, hey, whoa, relax, suavecito, relax, calm down, hold up. So here's where we're at. We're in May. They've paid off $140,000 plus of debt rather than $113 in the same time period. Cash flow is over $10,000 per month, and now we've got now we're gonna start forming these policies, and the way we're gonna do it, all right, the way we're gonna set that up, okay, this is on this side, that's the checking account, right? Income comes in for them, okay? Money goes in the checking account. Right here is the HELOC, and then this is the desired policies that they want to put in place. Rather than using his cash flow, right, that we gained, what do you think I'm gonna do? I'm gonna take the HELOC, right? Take the HELOC, put it right here, and I'm going to structure a chunk that is similar to some of my annual expenses and monthly expenses. In this particular case, they have an expense coming up in July. So I was like, you know what? We're gonna take advantage of this opportunity here. Option one is come July or before July, this HELOC will go to zero, okay? Because they did the same chunking, right? They did a chunk in February, and then they chunked this amount, but like over here, and then now we're getting ready to zero out the line of credit right here. In June, the line of credit is going to be at zero. So the thing that they're faced with right now is they have a tuition bill for their daughter. It's $24,000 for the whole year, I believe. $24,000, all right, that they need to pay. And they have a choice of either paying it at once or like in payments, I believe, or something like that. All right, and all I'm doing right now is crossing out all the debts that are gone, right? The only thing we've got left is this and the mortgage. That's it, 5 months. Oh my God, hallelujah, right? So 2 things left. We're looking to start the policy. The reason why I was like, let's capitalize on this right now is because of that large annual bill. So when the HELOC is at zero, we're gonna take the same chunk amount, the $49,000, right? And we're gonna take a portion of that. The number that I have for them, I believe is gonna be $30,000 or $31,000, where $3,600 goes to start daughter's policy, and then the other $27,000 or so is gonna get dumped right into wife's policy, okay? And the way we're gonna design it is so that we can have $24,000 available in cash value. What do you think I'm gonna do with that money? I'm gonna borrow it out, dump it into the checking account, and then pay that annual expense of the tuition. It's money that I'm already going to spend. So rather than using that money to send it directly to the school, what he can do is he can send it to himself first by starting that life insurance policy, designed properly for maximization on cash and minimization on premiums, okay? Just so that we can take the money right back out and pay it. Let me ask you, does this affect cash flow whatsoever or income or expense? No, doesn't affect anything. We're still gonna keep doing velocity banking because the other 10K or so from the 49, right? I'm taking 30, so I still have, oh my God, I still got like 18, 19,000 available to chunk. That money can go here towards the student loans and he can start knocking that out, right? And then over here, since I'll have a policy loan out for the 24,000 or less, or whatever the bill actually is, we're not going to make a payment on it at all. We're just going to let it sit there, right, in the policy, just sit there. We're not going to make any payments to it. We've already did our chunk. That 27, 28K that we threw into wife's policy, portion of that goes towards premium, the rest cash. I can use the rest to take out, pay the bill. All right, so now the tuition is settled. So that means that he didn't have to use his cash flow to pay for that annual expense. I have a lot of people that ask, so, you know, how do you deal with, you know, your annual taxes on the mortgages or annual expenses, insurance, and things like tuition, things like that? I'm like, hey, since it's a chunk of money, we could factor in that chunk in our debt tool chunk, throw it in the policy, take it right back out, boom, pay the thing. Let it sit there. We can let it sit there. It doesn't matter. It's not going to cost us anything because when we go to pay it back, we're going to restore it back to what it was. And we're going to use the bank's money to restore it. Okay? Let me stop there. Let me see if people have some questions. Let me see if I lost anybody. Okay? Got 60 people in the house here. Love it. Let's see. Walter, man, how's it going? Alyssa contacted Steve. Great. Yes. Steve is a expert on the infinite banking concept. And my whole thing is velocity banking and infinite banking, combining to the two. So he's the magic. He designs the policies. He's got a whole team. I'm a part of his team. He's an awesome guy. He'll really break things down. He'll answer all your questions. He's got a YouTube channel as well, IBC Global. Check out his channel. His whole focus is the, infinite banking and how to use it and how to structure it properly, such on and such on. And my whole job is to actually build you up to that point, because there's so many people in here that want to get that policy and put in place for themselves, for their kids, for their wife, husband, the whole family. But, we got to focus here first, right? So rather than me sell you a policy that I know if we just waited patiently, got our numbers right, that we would, have better results over the long haul, right? So I like to work people up to it. And then after the policy deal, I'm gonna work you up to everything else. I'm gonna work you up to starting a business. I'm gonna work you up to investing in real estate with me and with this community, because I'm gonna watch out, because I'm gonna put something together. Watch out, I got this whole plan that I'm thinking about doing, like velocity banking hubs in each state, where I pick one client in each state that wants to be an instructor or like a facilitator, and kind of, manage people and set up meetings. And then I go live, but only to those classrooms. So I'll be everywhere at one time, and, be able to serve more people. So stay tuned for that. Stay tuned for that, because that's going to be fun. Let's see. Hey, Joseph, need a print spreadsheet email. Okay, good. Get that done. Let's see. Denzel, this is a revealing case. What was the main driver to showing it off today for our collective education? Stated another way, what's the main takeaway? 1 to 2 points from the plan you crafted. Okay, well, Texas, I'm not sure how long you've been watching me, but I've done many live scenarios where I just, get up in front of the board, start talking, and kind of work through a whole scenario, and really just show you how I work with people and show you the results that they get, so that you can build trust. So I can build trust with you. You get to know me. You get to see how I do things, how I talk, and how I, communicate when I'm actually in the works of it. So that's the whole, main point. The big takeaway from this is transformation. Like, how can velocity banking transform your way of thinking, your way of life, your whole perspective on money? Okay. Jeremy says, Jesus is Lord, you must be born again. Sure am. Jesus said, you must repent or you will perish. Luke 13:3, Corinthians 6:9. Ask him into your heart before it's too late. Yeshua is beginning and love warns. Yes, sir. Okay, only way must be saved. Okay. All right. Yes, Jeremy, saved in Christ. Love him. This is my way of reaching people. Really just breaking down the finances. All right, there's so much scripture about money, your head would spin. You'd be like, what? Jesus talk about money? Hey. Bryson, you are a blessing to many, bro. Keep on. Let's see. Who's got a question? I'm paying attention. Super focused. Stay disciplined. Yes. Alyssa, there is something to be learned from every scenario. There you go. That's another takeaway. Every single scenario. I mean, just different, something I'll say that'll click for you. It's like once the bell goes off, then it's like you're right to my website and you sign up, join my program, and you're in the community and I help you one-on-one. That's really what it is, Billy says 18,000 in 2 months. That's awesome. Looks like you're in a good place with properties. Once you get those paid off, passive income will skyrocket, and that's what you want. You have the right mindset. Yes. Joseph, modern day, okay. Facts, all right. Angela, good stuff. When replenishing the loans, does that go towards both the loan and premium/cash value? Great question. So, money went into the policy, right? And because I have the premiums, like not high and really low, part of that chunk from the HELOC actually pays the premium for the whole year. So I won't have an expense, okay? So that first chunk pays the whole annual premium, and then the rest goes towards cash value. Now, the cash value that I want to take out is going to be somewhere around $23,000, $24,000 to pay an expense that I already am going to pay for, right? I'm just paying it out of the policy, just taking the money out. Let me read the question again. Yeah, so when I go to pay it back, okay? When I go to pay it back, I'm going to pay it back when I've zeroed out or got close to zeroing out the line of credit, the HELOC, right? Because that chunk that we make, we're planning to make a chunk in July because the tuition bill is due in July. So part of 50,000, okay, part of it is all going towards these two policies over here, and then the rest is going to go towards the student loans, and then we start doing velocity banking over here, right? Same thing, same concept stays the same. All income goes into the HELOC, expenses come out, right? Blah, 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 blah. We go through the months. Let's say he zeroes it out by July, August, September, October. Let's say it takes 4 months, 4 or 5 months to zero it out. So like October, November, right? Zeroes out the HELOC. What we do now is I owe $23,000, $24,000 on the policy loan. What I can do is take a portion of the chunk again and send it to the policy, and I will replenish the loan. So I hope that answers the question. The next chunk will replenish the loan. There is no premium to be paid because I already paid it with the first chunk, okay? Hopefully that makes sense. I paid it with the first chunk. There's no premium. When I go to repay it, I'm paying back just the cash, and then it gets restored back to what it was as if I never pulled it out in the first place. And my next option is I can let the money sit and grow, do nothing, keep doing velocity banking over here, or what we can do is structure the next chunk to pay his 2 car insurances for the year, his property taxes for the year, and maybe his own personal taxes that he makes. He could pay it out of the policy. And that'll be around what? January, February. And then what? We do some more velocity banking. Come July, what happens? I throw another 23 into the policy, and then I take it out, and we keep doing it over and over again. The man is going to create wealth just from that one annual expense of $23,000, and it'll probably rise because tuition with them private schools, they always increase it, right? Every single year. You know, my parents out there, you know what I'm talking about. So he's literally creating wealth from expenses, and we're not even using the cash flow because the cash flow is being used to wipe out the debt, right? So I'm doing both. Velocity banking, infinite banking. Bam. Together. Let's see, who's got another question? Oh yeah. Joseph says, using velocity banking, infinite banking, nothing will stop you. Make it a lifestyle. Definitely, that's what it is, man. Let's see. So basically, you work 4 months for Uncle Sam, for the bank, and for yourself. That's a good way of looking at it. You're like tackling everything all at once. So you're using the bank's money to pay Uncle Sam and every other expense and the bank's, and then we're using the bank's money. We're using our money to pay back what we use from the bank, and then we take that money again. The difference between all that savings and cash flow gains is for myself, and then I throw it here into that new strategy. Okay? Joseph says, how much do you charge for me to become a client? I'd like you to go to my website, denzelrodriguez.com. I do coaching by the hour, 97 bucks an hour. You know, we sit for an hour, we talk, we map out your financial life in that hour. We try to answer as much questions as we possibly can and go from there. And then I have a lifetime program, $997 one-time fee, and you literally get me for life. I had a dude ask me a question, what does lifetime mean? And I said, lifetime means lifetime. Point simple. No explanation. It's for life. I'm 23, and however long I live is how long I will serve you. And one of us has to meet the Lord in order for the program to stop. Okay? And even in death, whether it's on your part or my part, my legacy will continue to flourish because I'm going to make partnerships with people that are going to continue the legacy. And then in the event that I lose a client, right, then I will jump to the family, the next of kin, whether it was the husband that passed away or the wife that passed away, whichever. I will then work with husband or wife. If both passed away, I'm working on kids. So I will make sure that what you started does not end with your life. And that's the whole point that I really want to do in this community, is establish a kingdom that will last forever. Okay? A lifestyle, a way of living, a perspective, a way of rising people up, committing to people, right? Literally committing, right? That's what I want to do. So visit my website, read the details. I got some videos that explain everything that we do, and we keep going from there. So AJ says, what about the subsequent years? Same rhythm. Every chunk out of our year, one of the chunks, because he's going to be able to do about 3 chunks a year every 4 months, right? 4, 8, 12. So he'll be able to get in at least 3 chunks a year. One of those chunks is going to get applied towards paying an annual expense. Before we pay the annual expense or expenses, we're throwing it into the policy, borrowing against it, paying ourselves back from that very next chunk. We never lose our cash flow. We keep going. As we go through the subsequent years, what else is happening? This debt is getting wiped out, my man. Dude, if he wiped out $140,000+ of debt in 5 months, what do you think he's going to do in a year? Right? And you did simple math. I mean, we could have this thing wiped out in about 4 years or less. And I'm being conservative because I know he can make me more money. I know he can get me a raise because he is good at what he does, or else he would not be getting paid that amount. Okay? And that's why we wouldn't be calling him daddy today. All right? So he's doing his thing. Let's see. Yep, Billy says you pay the premium every year, just repeat the process. Yep. What's up, Denzel? Have to leave. Some comments on some guy who disproved your message back in the past. Yeah, man, the more negativity we get, that's like confirmation that I'm on to something. I must be doing something right, because I'm shocking people. I'm like, oh, what? Why is he borrowing from Peter to pay Paul? How does that work? It's a scam. Let's see. I thought you have to elect where the funds go towards. Yeah, you can. So you could, let's say you borrow against your policy. When you pay it back, you know what? I don't really know, but I want to say that when you take policy loans out, I know that you have an option on how you want to pay it back. You can pay it back in one lump sum. You can pay it back in payments. You can let the policy pay itself back, right, over time, and then you can just pay the difference in interest. You can do that. I don't recommend it. I like to just replenish the whole thing. All right. I hope that helps. Reese says, I don't quite get infinite banking, but is it more important to get out of debt first with velocity banking? Yes. If you are in massive debt. See, the difference with this scenario here is the cash flow. Remember, cash flow is key to this concept of velocity banking. The more free cash flow I have, the more I can do, right? I've done scenarios in the past where someone's making like 15, 18 grand a month, and we're doing both velocity banking to pay off debt, and then we're doing velocity banking to invest money to do what? Create more cash flow, 10x our income. So cash flow is key. If you want to establish your tax-free bank, you want to do the infinite banking concept, my recommendation is you have someone look at your numbers, someone like me, right? And you work with me and I look at your numbers and we kind of see, okay, does it make sense to try to start it right now? Or, should we, get the line of credit first and let's get some momentum going. There's people on this channel that are not clients and they've done all of this right here. And then they just call me to do this, right? So if you're really focused and really committed, the amount of data that I put on this channel that we create together, listen, if you're really committed, you could do this. You can get your numbers in line. You can start cutting back. You can start redirecting money. I show you how to get the debt tool. Show you to get your numbers in line. I show you how to, choose which debts to pay off first. And then you can just call me and be like, yo, do that. All right, I'll do it. We work together, have some fun. See, Billy says you can only put in whatever your MEC limit is, though. That is true. So when we're structuring a policy, I'm saying that I'm putting in a certain amount, but then I design a MEC that's probably like double what I'm saying I'm putting in so that I have space to put in more over time, because over time, we're wiping out more debt, we're getting more cash value, we're getting more cash flow that we can put into the cash value, all right? Let's see. I have a friend that is denied on a personal line of credit. He does have a business. Is it worth trying to acquire a line of credit on business name? If majority of his income is coming from the business, yeah, that'd be wise. That's what I'm trying to do now, is I no longer make personal income, right? So when I stopped working at my job, I had all my debt tools on the personal side. And then when I started the business, I had to start from scratch. So what did I do? I started building business credit. I started educating myself. I started looking at credit repair. I have services below in the description. Click that show more button and you'll see something that says Business Credit 101. Click on that or send that to your friend so he can, connect with someone that knows about business credit, building business credit, getting access to credit lines and how to, go about doing that. Because that is very smart to have, is credit on the business side and the personal. So that was something I had to do for myself. And now I have, months, 4 or 5 months later, I've got 3 debt tools on the business side. So it's not going to take a long time, okay? You just got to be disciplined and say what you're going to say you're going to do. Anthony, how are you, man? I have a friend in the weeds. I talked to him about velocity banking, and he mentioned of an inversion on AXA he has with 2 years left to access the money. Is there anything he can do? I don't know what AXA is. Is that like an annuity or something? I don't know. You got to educate me, dude. What is that? What's that? I don't know what that is. Let's see. His cash flow is very low right now. If cash flow is low, you already know what to do. You got to improve that. Cut back. Cut back. Right? Do you need cable? No. Do you need Netflix, Hulu, Pandora, Spotify, Apple Music, and all this yada yada yada? All right? Cut all that crap out. Do you need to dine out 3 times a week? No. Cut it down to 1. Cut it down to 0. Cook food at home. Right? So many things that we can do. Is it true that 90% of cash value will grow for how much you take out in loans? I saw my illustration shows that even though I put in a certain amount, each of the subsequent years showed more or the same that I can borrow. You may have an incorrectly designed policy, right? So however much cash value I have in my policy is the amount that I will earn on that cash value. And then the rest is premium. And then you also get a dividend on your premium, because dividends literally means a return of premium in the insurance world, right? So, you know, you got to really, yeah, you know, it's good that you're asking that question, you know, and you can send me an email and I can look at the policy if you want, and we can get our questions answered. We can look deeper into it and get to the thick of it. When you're taking out loans, because I know that was another part of the question. When you're taking out loans, you want to make sure that whatever interest rate I'm being charged on the loan is matched to whatever interest rate the company is actually crediting me on the total amount of money, right? So I want to have this difference where I'm earning more than what I'm actually paying, right? And remember, based on velocity banking, if I have that policy loan out for only 4 months, right? Because that's what I'm trying to do here with this person. I'm not telling him take $23,000 out, don't pay it for a year. Why would I do that? I want to replenish it as fast as possible so I can restore the money back to what it was as if I never touched it, add more money into it over the years, and keep going. So we're going faster than what the interest is actually going to charge me, right? So, you know, the strategy is in how we use the policy, right? Because no doubt, if you've got money in a cash value policy, you take it all out and you don't do anything to pay it back, yeah, you're going to pay interest on top of the balance, and there can come a time where the cash value gets so low that now it begins to like lapse over, and the policy self-destructs on itself. So it's all in the strategy, that we want to really, really pay attention to. Hope that helps a little bit. You know, I'm learning this stuff myself too, so I try to really get as much information as I possibly can. But you reach out to a guy like Steve, you click the link below about it'll say cash value life insurance asset, right, to acquire it. You can click on that. You can talk to an expert there, and they'll map it out for you. They'll explain it. Or go to his website, go to his YouTube channel, IBC Global, and he's got some really nice in-depth videos on how it's designed, how it's structured, how to use it, how policy loans work. Everything, man, right? It's really good. Billy, yes, especially if your cash flow is not that high. Depends on your need and what you want to do. Yes. Joel says, like the bombers in World War II, you know you're on target when you're receiving a lot of flack. Yes, sir. Joel, I was praying the other day, Joel, and I know you're a part of a church and you're building things. I'd like to talk with you and figure out a way how I can bless what you're doing. I don't know, something was urging me to want to do something for you. I don't know what that is, but I'd like to explore that a little bit. So be sure to email me. Got like a gut feeling that I'm supposed to do something with you, and I would like to, help bless whatever specific thing you might be working on. I don't know what that is, but I believe you're working on something in the church or with your business, and I may have the funds to help you get that. So I'd like to be a blessing for you, sir. You've been with me since like day one, since this YouTube channel. So I'd like to give in your direction, and I think something amazing is going to come from it. I don't know what, but it just struck me. So I felt like I had to say it because, you know, I see you on here. So be sure to send me an email. Let's see. I'm not a client, but I've been looking at your videos for the past 2 months. Let's go, entertainment. What you doing, man? Let's go. Let me work with you. Geneve, new to channel, gathering my financial info together to become new client. Wonderful. Get those numbers in order and we'll be talking soon. I got people at work who don't believe velocity banking is worth it. They think saving $3K emergency fund is smarter, and then just throw all your extra income on whatever you're trying to pay off. Hey, teach your zone. Show them Dave Ramsey. They'll probably like him a lot, right? My wife and I are looking to buy our first home, but I'm looking closely at the market, hoping to be in the position to invest when that happens. Good, 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 good. Let's see, Greg, got a $5,000 line of credit, $8,500 in monthly bills, $1,000 cash flow, have a retirement account that I can tap into. Seems like $5,000 isn't enough for me. Total debt is $990,000. Correct. The line of credit is not enough, but don't stop there. We can work our way up. We can build it. So, you know, keep at it. What's up, Gregory? American military equals freedom. Steven Crowder, good channel on YouTube. Okay, we can check him out. Let's see. What's the max amount of insurance premium can be prepaid? Up to a year's premium or the whole thing? So you have an option. You could do like a 2-pay policy, a 5-pay, a 10-pay, a 15-pay, which means that you pay the money up for just those 5 years, and then you won't have a cost of premium ever again. It's one way of doing it. The other way is we use velocity banking to chunk into the policy and we pay it for the whole year. So you can only prepay a policy, a premium, for that 1 year. Boom, that's it. And then any additional money that you put into the policy will add to the MEC, and then you can only put in up to the MEC, and then that's it. Okay? So, okay, I think it's been an hour. Who's got the time? Has it been an hour? Let me know. Because, you know, we usually do our classes, you know, 1 hour long, and then I let you go on your merry way and enjoy the rest of the day. I want to wish you guys a wonderful, blessed weekend. I'm going to enjoy myself this weekend and be blessed in the presence of a beautiful young woman that challenges me every day, that gives me the strength to do what I do here, and builds my attitude and behavior. She challenges my perspectives. She challenges my thoughts and opinions, and challenges. And I would say that you need to be with someone that challenges you to take action, to move forward, right? If you're the one in the relationship that's doing all the challenging, keep challenging. Don't give up. They'll come along in due time. The blessing, the revelation will come to them in their due time period. They're in a season, right? So once they get out of that season and you're there, then you hit the moment, right, for them. So really, keep doing what you guys are doing. Allow this concept to really transform you, right, and renew your mind and focus on things that are just more important than things that are not important. Focus on your needs, okay? Achieve the goals that you want to do financially, and I promise you we will get there in a short period of time. Like, if you really focus, think about it. If you haven't been doing what you've been doing now, and you've got 20 years, 30 years of doing something this way with no results, don't expect that when we transition into this new thing that it's going to happen in 90 days, 30 days, or 20 days, or 1 week, okay? Consider forming these 1 year, 3 year, 5 year, 10-year goals. I don't care how old you are. I have clients that are 70, 75, 78, okay? And I'm giving them a 5-year goal. They could have another good 15 years in them. I don't know. I'm not going to assume that they're going to die, and nor should you, right? When the Lord calls you, He calls you. I believe that you'll go when you've fulfilled your purpose. So don't die without fulfilling that purpose. Don't die with a business inside of you, with a book inside of you, with a YouTube channel inside of you, an invention, an idea, a perspective. Don't die with anything. You gotta release it all. Okay? So I want to wish you guys a blessed day. God bless you. Love you. Be safe. Okay? And yep, Jesus, have a good day. Walter, you have a good one. Andre, Joel, we'll be talking. All right? Just be sure to send me an email.